Hello friends, in today's video I'll tell you how to prepare balance sheet of the company for equity share capital. Here in the question it's given to us Ankit Limited was registered with an authorized capital of 1 crore 20 lakh divided into 1 lakh 20,000 equity shares of rupees 100 each. Out of this authorized tells the maximum capital which a company can issue. The company here issued how many number of shares? 6,000 equity shares as fully paid up to the vendor for the purchase of building. So it was issue of shares other than cash that were number 6,000. Except to these 6,000 shares, 50,000 were also issued to the general public for the subscription. So how much was the value of issued capital? That is 56,000 here. Now in the question he says all the case calls were made and duly received except second and final call on of rupees 20 per share on 700 shares. So except means the company has not received their final call on how many number of shares, that is on 700. So out of 50,000 shares which were issued to the general public on 700 shares, they have not received their first and final call. So rest 49,300 share they have received the full value which was called up by the company. So we are supposed to prepare balance sheet and also notes to accounts. So first we will go for the notes to accounts preparation. In the notes to accounts we have particulars column and amount column. The first heading over here to show you is the first point, that is in the notes to account as share capital. Under the share capital we have three headings here. First is authorized capital, second is issued capital, and the third one is subscribed capital. Subscribed capital is further divided into the two parts: subscribed and fully paid up, subscribed but not fully paid up. Okay, so first of all, authorized capital. In the question it was given to us there's 1,20,000 equity shares of 100 each were authorized capital of this company. So we got a value here, that is 1 crore 20 lakh was the total authorized value, out of which company issued 6,000 shares to the vendors and 50,000 shares to the general public. So the total number of shares issued by the company were 56,000 of 100 each. We got 56 lakh over here. Now for the subscribed capital, in the question it was given which were issued to the vendor, they were fully subscribed, right? Then there were number of shares in 50,000 shares, that were only 700 number of shares on which the company have not received full amount called up. So the rest number of shares on which full amount is received is 49,300. So 6,000 plus 49,300, we will show it as subscribed and fully paid up capital because the total sum called was received by the firm here, right? Now subscribed but not fully paid up were 700 equity shares of rupees 100 each, on which second and final call of rupees 20 was not received by the firm company. So calls in arrears we deducted from the called up value, and the rest value is taken over here 56,000. So when we added 6 lakh plus 4 lakh 93,000 plus 56,000, we got a value over here 55 lakh 86,000 is the total value for which the subscribed capital is to be shown in the balance sheet. In the balance sheet we will not show the value of authorized and issued, rather we will only show the value of subscribed capital. Okay, so for share capital in the balance sheet we are preparing an extract because it is not a full-fledged balance sheet. We are not showing each and every item in the balance sheet, that's why it is known as extract. As on if date is given to us, the liability side is known as equities and liabilities. One column is for notes to accounts, another column is for amount. Notes to accounts, from first notes to account we took our share capital for the heading shareholder funds. Shareholder fund includes share capital and reserves and surplus also, but here we need to prepare only for share capital. This is taken from notes to accounts 1. And what was the value here? Subscribed and fully subscribed capital, that was 55 lakh 86,000. that value is to be shown here in the balance sheet. Authorized and issued capital is never shown, right? And next important thing one I want to which I want to tell you over here is your issued capital can never be higher than authorized capital. Your subscribed capital can never carry a higher value than issued capital. Okay, because what is issued by the company only can be subscribed by the company, not a higher value. And for these all cases you will take the value of your share capital only at face value, nominal value, without any premium, without any discount over here. Right here no value of your share capital is shown with premium, rather they are taken at a face value. Thank you. Accountitude. Keep scoring. Like, share, and subscribe to my channel.